Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that explores what's possible in the world of investing. If you've just joined us for the very first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. Always excited to talk stocks. Always excited to share the power of compounding and the power of long-term investing.
In today's episode, we're going to cover off the news that is making headlines around the world. Ren, you're going to tell me if you're selling Novo Nordisk and why. Very intrigued about that. And we're closing out with a property update from Sam Gordon, looking at two major questions that always come through the community. A, how do you find a good buyer's agent? And B, is investing in property through super a good idea?
News and markets.
Headlines for today. Lab-grown meat has been approved in Australia. XAI has done another capital raise, making Elon Musk even richer. And what the Meta is throwing ungodly amounts of money at AI, right?
Yeah, a lot of AI making people richer stories. Let's start with lab-grown meat, though, because, we're not calling it lab-grown meat anymore, apparently.
Yep.
We're calling it cultured meat.
Cultivated?
Oh, yeah, also cultivated. Cell-cultivated, cultured.
Cultured?
Or lab-grown. For ease of identification in this conversation, we'll just stick with lab-grown.
Okay, sure.
But that people in the industry would think that's a pejorative term.
Yeah.
So let's explain what it is. What is lab-grown meat?
It's meat that is it's state of the art and it's grown in a lab.
You can't use the name in the definition. They take biological cells of animal.
Yeah.
So it is like biologically animal, and then they grow that in a lab. And I know I still use grow in that explanation.
And lab.
True. Singapore has been out in front of this, so they started approving lab-grown meat in 2022. Eat Just, they had chicken, and then Vow, the company we're talking about today, and a couple of other companies. We've seen approvals in the US and we've seen approvals in Hong Kong. But the news of the week is we've just seen our first Southern Hemisphere approval of lab-grown meat in Australia and New Zealand. The Food Standards Australia and New Zealand, the regulator, approved Vow's lab-grown quail.
Japanese quail.
Japanese quail, yes. Now, Vow is an Australian startup. I think it started in 2019. Their first product was a non-farmed kangaroo dumpling. So lab-grown kangaroo. They've been selling in Singapore. Now they have approval to sell in Australia. So Bryce, the big question is, they now have approval to sell, but will anyone buy it?
It's a good question. I think the move away from the terminology lab-grown is a good branding exercise. I think lab-grown really has a bit of a stink around it. They need to change it. And I'm glad it's cultivated or whatever the new terminology is. For me, it comes down to pricing, though. Pricing and taste. Firstly, you got to make sure it tastes good.
Well, I mean, it's going to taste similar, I imagine.
If it does, then it's
like
just
biologically, it's animal cells.
Yeah, but like it surely one lab to another can.
Yeah. Well, I mean, like the difference between like grass-fed and non-grass-fed beef, So there will be a difference, obviously.
And so then for me, it comes down to price point.
Yeah. So right now, it's sold as quite a premium product because obviously manufacturing is early days, and so. You start by selling small amounts at a premium price point as you build out manufacturing capacity, and then you can bring prices lower. I saw an article from last year that Vow was making about 100 kilos a month of lab-grown meat. So, not nothing. You're completely distracted by your computer right now.
Yeah, I'm just looking at the website, Vow website, and looking at their quail products. And this is almost, I feel like they're going too far. One of them is a candle. It looks like a candle, melts like a candle, but tastes like meat.
Why do you eat candles?
Exactly. Why are they doing that? Like, if you want to introduce it, make it just normal. The other one is a Moorish whipped pate. The first spoonful doesn't convince you, the second will.
Yeah, I feel like the candle isn't doing them any favors.
It's not doing any
trying to convince people this is
just
food.
give us a steak. Seriously. And quail as well. Like, I get it. It looks very interesting, and if you can have a candle that's made from, meat protein and whatnot, but like, come on.
Okay.
If you want to go general masses.
So I put this up.
What about you?
I would be interested in trying it.
Yeah.
I see all the environmental arguments.
Yeah, sure. Absolutely.
Like if people have ethical problems with factory farming, this is an alternative. So like I see those arguments, but it feels like in a world where we are trying to move away from ultra processed foods, and like in particular the last few years, like I've really tried to just not eat ultra processed foods. Then to turn around and eat like the most processed form of food, it's a bit.
There's a difference between, I guess, that type of process.
I was going to say this is probably less processed than some of the protein bars that you eat.
I would imagine so.
Yeah.
The birthday cake flavoured protein bars. Where that could have a quail candle on top.
So look, I think the news of the day is it's here. It's no longer theoretical. It's available in Australia. And it's only going to happen more and more. So watch out for those conversations. Someone asked us on Instagram, are these companies investable? They're all private at the moment because these are different to like Beyond Meat, which is plant-based meat.
Yeah.
These are actual animal cells just grown in a lab. Blackbird, the Australian VC, took a big chunk in Vow, I'm pretty sure, early days.
How do we buy it?
It won't be in the supermarket.
Now in Sydney, made in Sydney, now on menu in Australia.
It'll be at like very fancy restaurants and stuff to start with.
I got announced yesterday. Okay, fancy restaurants.
We're up with the news.
Yeah.
All right, let's move on. Bryce is distracted by his computer again. I think he's getting hungry. He wants to eat that candle. Let's talk AI because that's all that everyone's talking about. XAI, Elon Musk's artificial intelligence startup, has announced plans to raise another $4.3 billion US. This comes on top of a $5 billion debt raise earlier this year. I think the unavoidable conclusion is companies in the AI space are just burning money and like whether there'll be a return. I mean, it looks like there will be a return, but God, they are just raising and spending a lot.
It's a land grab.
But that's not new news. What we found quite interesting was XAI is going to be valued at $80 billion as part of this capital raise, which gives Elon his third company to reach that valuation after Tesla and SpaceX. And I had a look at company market cap, publicly listed companies globally. $80 billion puts you in the top 250 companies globally.
So Tesla's $1 trillion company?
Yep.
SpaceX is $350 billion?
Yep.
Private markets.
Yep.
And so he's then got another 80 bill.
Yeah. So he's got 3 companies in the top 250 in the world. That's impressive.
That is impressive.
Like, we're not here to...
So he's a massive chooch.
Yeah. His political views are cooked.
Yeah.
He fried his brain on ketamine and Twitter,
Yes.
But he can build a company.
From a pure entrepreneurial standpoint, he has done incredibly well.
Yeah.
Yeah, it is pretty phenomenal. Speaking of the money that is going around in AI, Ren, this is a bit of a what the story for us, and it comes from our daily newsletter. We have a what the section where we share interesting interesting business stories that have really grabbed our attention. And Meta is absolutely throwing ungodly amounts of cash around in the AI space.
Yeah, so there's 2 stories here that we think are part of the same bigger story. The first one came from one of Meta's main rivals in the AI space, OpenAI CEO Sam Altman. He was on a podcast and he let slip that Meta is offering $100 million sign-on bonuses for OpenAI staff to come across to Meta.
How crazy is that?
Yeah.
$100 million sign-on.
$100 million sign-on. And like, who knows if it's real, but even if like he's putting a bit of mayo on it and it's $50 million sign-on bonuses. What's
the incentive post that? It's like you've just had life-changing money thrown at you.
Well, he was saying it in the context that a lot of people aren't leaving because all these people on the forefront of AI, they can walk into millions of dollars anywhere. But the opportunity to work on like this technology is
life. That's what they're incentivized by.
Yeah. Now I actually watched the clip and what he said afterwards, he was like, the $100 million sign-on bonuses, that got all the headlines. But afterwards he said, and remuneration that's even more or something like that.
Well, that makes sense because usually like the sign-on bonuses are, solid, but it's not generally more than what
And maybe like the sign-on bonuses are so big because they have to buy out these guys, like OpenAI employees, equity, but also like the potential upside on that OpenAI equity.
Definitely.
So like you can start to then see how early employees of OpenAI are going to need a big sign-on bonus to get them to move.
It's unbelievable. It's not the own.
But yeah, that is just one of the two stories.
It is. The second part to this story is Meta has just taken a 49% stake in Scale AI, spending $14.3 billion to do so. Now, Scale AI was founded by a 28-year-old Alexander Wang, who is born in 1997.
Yeah.
Jeez. His net worth is now estimated at $3.6 billion.
Nuts.
Meta took this position because they want Alexander to come on and lead their super intelligence division.
Yeah. Scale AI, if you look at the company, like they've had a lot of government contracts as well. Like they've helped the Department of Defense in the US navigate AI and stuff like that. But Bryce, you said that this segment is all about us asking and we're asking about the amount of money that Meta is throwing around. But we're also asking because we watched an interview from Alexander Wang talking about having kids, and it certainly had us scratching our heads.
I want to wait to have kids until we figure out how Neuralink or other, it's called brain-computer interfaces, so other ways for brains to interlink with a computer until they start working. So there's a few reasons for this. First is, in your first 7 years of life, your brain is more neuroplastic than at any other point in your life, like by an order of magnitude. I think when we get Neuralink and we get these other technologies, kids who are born with them are going to learn how to use them in crazy ways. Like it'll be actually a part of their brain in a way that it'll never be true for an adult who gets a Neuralink or whatever hooked into their brain. And humans, we're only evolving at a certain rate. Humans will get smarter over time. It's just on the timescale of millions of years because natural selection and evolution is really slow. So if you play this forward, right, you're going to have AIs that are going to continue getting smarter, continue improving. They're going to keep improving really quickly. Biology is going to improve only so fast. What we need at some point is the ability to tap into AI ourselves. And so eventually, I think we're going to need some interlink or hookup between our brains directly to AI and the internet and all these things. It is potentially dangerous and it's potentially, to your point, terrifying and scary, but we just are going to have to do it. AI is going to go like this. Humans are going to improve at a much slower rate, and we're going to need to hook into that capability.
So, Bryce, the question that comes out of that, will you wait for Neuralink before you have kids?
I mean, how long is he talking here? Because for context, Neuralink is one of Elon Musk's companies.
Probably going to be his fourth $80 billion company.
Yeah, and it puts what did he call them? Brain computer interfaces into people's brains. Early stages. Alexander's 28 years old. I just find it nuts that we're actually talking about this as it's a genuine thing that we're going to see in our lifetime beyond just what's going on with Elon now, but
they exist now.
I know, but what I'm saying is it's not far-fetched to think in a couple of decades they're going to be genuinely useful.
Yeah.
and plugging in so that we can keep up with the speed of intelligence. Yeah, but that's wild.
It's keep up with the speed of intelligence, but it also is going to become a really haves and have not situation where even if you don't want a brain computer interface, you're going to feel that you need one because you just
can't keep up.
Yeah. In the capitalist market for labor, if you have the choice to hire someone with a brain computer interface and someone without.
Yeah.
So there's going to be a lot of economic and social pressure to do it. You're going to feel like you're letting your kids down if you don't put it in, and then all of a sudden it's
the income inequality here is also going to be wild.
Yeah, how much it's going to cost.
Yeah, you're not going to this isn't just going to be something that if you choose to want it, you're going to get it. It's probably going to cost a shitload.
Yeah. Now, it's not coming tomorrow. So, there are humans with Neuralinks, and we should be clear that there are other brain-computer interface companies out there. It's just that Elon has a real branding advantage over them. But yeah, there are people who are quadriplegic who are now communicating through computers, and you can just see like there's a real use case there. The quality of life improves so much. But it's a pretty scary new frontier we're entering. So
it's absolutely wild. Anyway,
let's watch this space.
Let's watch this space. A reminder to sign up to our daily newsletter so you can keep up with all of the headlines. There'll be a link in the show notes. We also have a podcast that turns those written headlines into audio form. It's called Headlines by Equity Mates. You'll be able to find it wherever you listen to your podcasts. We'll deliver the news to you in less than 5 minutes every morning. Novo Nordisk no doubt has changed the world with its weight loss drug Ozempic, but with the share price down over 50%, the question is it time to sell? And Ren, you're a shareholder.
Yeah, I mean, that's the question.
Have you been considering what to do with Novo?
That's the question I've been asking. Yeah. And I wanted to take a segment of the show to talk about it because I feel like we get a lot of information from a lot of different places. Like, we're in a pretty privileged position here. Yeah. We do a bunch of daily news content, so the Equity Mates daily newsletter and the Headlines by Equity Mates podcast. So we have our finger on the pulse about what's happening in the news. And there was a news story that caught my attention. Novo Nordisk in Canada missed a $250 patent maintenance fee. And because of that, it means semaglutide, the active ingredient behind Wegovy and Ozempic, will now go off patent next year in 2026.
Surely heads roll.
Well, I mean, the CEO did get fired, not specifically for that.
So just on that though, so when you say,
okay, yeah, that was only part one of what I was saying.
But just they've missed the patent maintenance fee in Canada. That patent, like, it's not a global patent, but it just means that people now can really get access to
semaglutide.
Yeah.
No. So it just means next year in Canada, generics will be able to compete. Yeah. So that was information number one. And then recently on Basis Points, our podcast where we interview some of Australia's best advisors and fund managers, we spoke to Mugunthan Siva, who's the CEO of India Avenue.
Great interview, by the way.
Yeah. This episode is actually going to be out before that interview. That interview will be out on the 1st of July. He's an Australian-based fund manager, but they invest in India. And so we were just talking about, what's happening in India, and he noted that there were a number of Indian pharmaceutical companies who are gearing up to start making generics for Ozempic. And so Equity Mates is a place where we come and synthesize all the information that we've been learning from all of our different sources. So I wanted to do a bit of a deep dive on Novo because I've been questioning it for a while, as I'm sure a lot of Novo Nordisk shareholders have. I mean, it's down more than 50%.
It is.
It's brutal.
Yeah.
So for starters, before we get into the patent story and the generics story, I had this perception that Eli Lilly was absolutely pumping Novo Nordisk.
With Mounjaro?
Yeah.
I wouldn't say pumping, but
like that, like it feels like they're winning.
They're winning in terms of a better drug.
Okay.
Yeah.
Well, I mean, they're winning in terms of share price.
And share price, yeah.
But the data doesn't actually back up that on the ground sales. So Novo Nordisk's Ozempic and Wegovy, like the diabetes and weight loss pair, are outpacing Eli Lilly's Mounjaro and Zepbound, even though Eli Lilly's drugs have been more clinically effective.
Yep.
From the most recent earnings report, Novo reported $2.54 billion in quarterly sales for Wegovy, which outpaced analyst expectations. In contrast, Eli Lilly's Zepbound did $1.26 billion, and it actually fell short of analyst expectations. So just looking at those two numbers, like Novo sold double what Eli sold.
What's the growth of the two, though? Do you know?
I don't have that number.
I think Eli's growing faster.
Yeah, okay.
Yeah.
What I really wanted to focus on was cost of production, and neither of them split out cost of production, but when you read, I guess, like analysts writing about the two, most of them believe that Novo is actually a lower cost producer. Eli's called out manufacturing costs as like a key challenge. The difference is that Novo has found capacity constraints.
Yeah.
So they can produce it well. They know how to produce these drugs, but they can't build factories fast enough. Eli's knows how to scale a drug, but they're having more cost overruns producing this particular drug.
Yeah.
If that distinction makes sense.
Yes.
So anyway, I wanted to deep dive on what's to go with patents. So here's a quick roundup of the two main producers and when their patents expire. Novo Nordisk, semaglutide, which is Ozempic and Wegovy. Canada, 2026, as we mentioned. So not ideal there. Also 2026 in India, China, and Brazil. So some key markets where Ozempic will be rolling off patent next year. Japan and then EU and the UK, 2031. So they've still got a bit of time. The US, 2032. And then finally coming back home, Australia, mid-2026.
2026?
But, and here's the but, because here's the thing with IP law in 2025. There's always ways to extend your IP protection. There's like evergreening clauses where you can protect like different parts of, you know, like the mode of injection and stuff like that. They reckon that Novo will be able to extend it in Australia until 2033.
Okay.
So it's like, okay, they kind of screwed up in Canada, but, you know, they've got 5 to 8 years to continue exploiting this drug, depending on the market we're talking about. So that sort of made me less concerned. Just for completeness sake, I had a look at Eli Lilly's. So
Tirzepatide.
that was good.
Yeah.
There you go. Which is
Tirzepatide.
Should have stuck with your first one. So that's the active ingredient in Mounjaro and Zepbound, Eli Lilly's weight loss drug. In the US, they've got patent protection until 2036. In Australia, 2036, evergreening until 2039. Globally, they've got longer runways. In some markets, more than a decade. So less of a concern. But I kind of went down this rabbit hole around like what would the effect of generics be? And in general, small molecule genetics often undercut the brand names by like 80 to 85%. And there was a study out of Yale that found that GLP-1 medications like semaglutide, so like Ozempic, could be produced and sold at a profit for under $1 per patient per month.
Wow.
What do you think the cost per patient per month in the US at the moment is?
To like the cost to create the
the cost to the patient. Like if we were going to...
Oh, it's over $1,500, isn't it?
Oh, close. $1,300.
13, yeah.
So they could be produced profitably at $1,
Yeah.
but they're being sold at $1,300.
That's pharmaceuticals, baby.
That's patent
That's
protection.
pharmaceuticals, yeah.
The generics are coming. Novartis is like a massive pharmaceutical company. They've got a generics arm called Sandoz, and they've signaled plans to hit Canada in 2026. They're primed and ready to go. Hikma Pharmaceuticals, which is based in the UK and Jordan, they've got plans to launch generics in 2026 in markets where patents expire. Hikma's CEO compared GLP-1 drugs to penicillin. Big call.
Yes, very big call.
In Brazil, Hyperia is a pharmaceutical company that's planning to launch a generic in 2026. And in India, tying back to this conversation we had on basis points, there are several generic firms that all have semaglutide generics good to go in January 2026. The generic wave is coming. It's going to bring costs down, 80 to 90%. But we framed this segment as, is Ren about to sell Novo? And I was a bit worried about the patent story, but looking at this, it's like they're going to make super profits for another 5 to 8 years. So I don't
it's
think
also
I'm
like
sell.
when the generics come through, then it's not like they're going to just stop selling in those markets.
No, it's just that their margins will get absolutely crunched.
Yeah, they will, but like their addressable market might increase. And
but the thing is, like, you wouldn't expect Novo to be able to compete on price with.
Why not?
Because historically, generic makers play a different game. Like
I know they'll want to. They won't go as low. It's just like Panadol. It's a brand play now.
No, the business model for these branded pharmaceutical companies is to stay ahead of the patent cliff. So like to have the next generation of the drug. And that's what, we know they're working on that. Eli Lilly's had more success than Novo in their clinical trials around this.
Yeah.
But the Pfizers and the Eli's and all of those, they don't play the low-cost game. They play the continual innovation game.
Yeah.
So that's what you'd watch as a Novo shareholder. But I don't think I'm going to sell. I think I'm strapping in for this ride.
Definitely one to watch, yeah. I guess to your point, you're going to need to actually keep an eye on how good they are at the keeping ahead of the patent game.
Yeah.
And that's
like,
the play.
Full disclosure, I own both. Like, that's the beauty of investing. You don't have to choose Novo or Eli Lilly. You don't have to choose Coles or Woolies. You don't have to choose Tesla or VW, although I'm not choosing either of those. You can play both sides of a trend. But yeah, Eli Lilly wasn't on chopping block for me, but
No.
is now off the chopping block as well.
Nice, good, love that. Well, it's pretty interesting, and a reminder, you should definitely, once it's out, 1st of July, I think it is, go and listen to that interview with Mugunthan from India Avenue on our Basis Points feed, which is our newest show in our network, designed for financial advisors, accessible to everyone, but a fascinating discussion around the growth story that is still yet to play out in India. Just absolutely, some of the numbers he talks about is absolutely wild. But we're going to take a quick break, and on the other side, we will be back with our regular property expert, Sam Gordon, as we unpack 2 questions around investing in property through your superannuation and how to find a good buyer's agent. We'll be right back. Welcome back to Equity Mates. We are here for our regular property update from our property expert, Sam Gordon. Sam, welcome back.
Boys, always great to be back. Thanks for having me.
Always good to have you. Now, if you're just joining us for the first time, Sam is founder of Australian Property Scout, one of Australia's leading investment buyers agents. Usually we've got the property update, what's going on around the country, but we've been sort of inundated with questions around property, and there are 2 sort of big thematics that keep coming through. The right way to invest in property, particularly when it comes to superannuation, and very topical given what's going on in super at the moment. And then secondly, questions around how to find a buyer's agent. So we're going to try and cover off both of those today with you, Sam.
For sure, boys.
So let's start with property inside or outside of super, and let's just put the proposed tax changes to one side. Like before this Division 296 stuff came up, how would you answer that question around the right structure to invest in property?
For me personally, it's always both. So, in all honesty, right? Because SMSF is a separate entity to yourself. So when a lot of people actually cap out with borrowing, they turn to SMSF because it's that different vehicle that doesn't take your personal borrowing into account.
So how does it calculate your borrowing, your SMS? How do banks calculate your SMSF's borrowing capacity?
By your contributions. By how much capital you have in there and your contributions.
So the income from SMSF and contributions.
Yeah, well, yeah, exactly that. So it's almost always contributions because the income side, unless you've built a large...
So it's like that 12% of your salary less the 15% tax is then like considered a whole different income stream by the bank.
Yes, and then obviously with the property that you also put in there with the income that comes from that as well, almost everyone has the ability to buy another property in their super. So what we find so often is people will build a portfolio first and then they get capped and then we roll them into, or have, let's have a look at SMSF as well. Or a lot of people build into the strategy very, very early these days. It's one of those things, mate, like most, and I know most of your listeners are probably in their 20s and 30s, and obviously you'd have them overall age groups and demographics, but 20s, 30s, even you think about it, at 40, you have 20 years to build the SMSF until you can touch it, and you've got a leveraged return in there. You can't refinance cash back out of it, but you can sell down and then reinvest those profits into additional deals as well. So I actually love SMSF. I took my SMSF from a 1 property portfolio 3 years ago, and now got a 5 property portfolio in there. Wow. I'm very aggressive with my SMSF, but not everyone has to be that aggressive with it. But it's one of those vehicles that, because it's separate to you and it's that long-term burn, it's very, very achievable for an average Australian to be able to build another 100, 200,000 net passive if they've got a 20, 30-year time frame, because that's a long time in the property game, and something they can consolidate down to maybe acquire like a large commercial asset or something at the back end that's just paying them that residual cash flow for all time. So I love it, man. And that's why when you was asking and I said both, you started laughing. I'm like, but this is like, it's so tangible to be able to build that second income stream.
So that was the answer before we then put this new tax overlay. So it hasn't passed yet, at least at time of recording, it hasn't passed yet.
Yes.
But assuming it does pass, does it change your thinking in any way?
Doesn't change anything at all.
Okay.
So $3 million worth of property, which is what they're talking about going over that, is when they start, obviously some different things will get implemented beyond that point. But for most people, they might have, like, the average Australian has $100,000, $200,000 in super. That's enough to get started with a deal. Like 150 definitely, 150 plus can get you one deal. It might be a $500,000, $600,000, $700,000 depending how much you've got in there. I think people are getting too worried about like the end game. It's almost like worried about being a millionaire or a billionaire, but you're making 50 grand a year or 150 grand a year. Like, you're not there yet. There's no ego or anything within that. It's just like, it's a fact of like, if you can buy one property and start to build that and scale that out, why would you worry? That might be $500,000-$600,000. Why are we worrying about a $3 million cap, which it's beyond that some unrealized gains may potentially come into the equation as well. So, man, for me, it doesn't change anything at all. And for all of our investors, we're not fazed by it. Policy changes come and go as well. We've got a Labor government in there right now. Like, what happens when Libs get back in, or like potentially 5, 10, 20 years down the track? Again, we've got such a long time frame in front of us to build a portfolio of a 3 million plus magnitude. typically starting with a smaller amount of money. So it doesn't change anything for me, man.
So one final question on this, and then let's move to buyer's agents. So for people who are intrigued by the idea of investing in property through their SMSF, is there a certain level of assets in an SMSF that people need before they should start thinking about investing in property that way?
Look, for me personally, like anything over 150,000 is definitely usable. We've had clients down to 100,000 plus sort of thing get into it, but typically that 150K plus is a very workable amount today. There are 90% loans you can get in there now too, so we can push the envelope a little bit harder than we used to be able to. Yeah, anything from like 100,000 plus, I'd be seriously looking at it because it's a leveraged return on something like that, and it's a pretty powerful vehicle, especially from a tax environment perspective.
Well, let's turn to buyer's agents. You are one of Australia's leading buyer's agents, and it's not just me saying it. You seem to come in here with a different award every time we chat.
There's been a few.
So for a lot of people who are interested in the concept of buyer's agents, but it's pretty new for a lot of people, like where would you start? What's some of the advice you would give, and what's some of the red flags to avoid?
I think the biggest advice is probably like if you've had a referral from someone that that's worked with someone that's been really good, that's typically something good to go off, whether that's Australian Property Scout or it's someone else. If someone else has had a great experience and done really, really well, then typically that's the easiest thing. It's like almost everything in life, right? A referral from someone that you trust is typically something pretty good to go off. The next question, if you don't have anyone that you could refer to, and even if you do have someone to refer to and then you speak to them around this, you might want to ask the questions. The first thing is really like, do you feel like you align with that person? That's really, really important because you're going to be working on a journey, and whether it's a front person in a company, that represents the rest of the brand, or whether it is literally the person you're going to be dealing with one-on-one with selecting the asset and actually purchasing a home, you need to align with that person and that company's, I think, moral compass and the way that they operate as well. That also leads into the strategy piece, that strategic piece in terms of actually building a portfolio. Is it just going to be a tick and flick and just doing a deal? Or are they actually trying to structure and build you a portfolio that's going to get you towards your goals? And I think this is very important from that perspective because you can't just win off one property. Like you're building a multi-property portfolio. In reality, most people's goals in terms of what they're chasing from an income stream is a 10 plus property portfolio to get there. So like you really want to align yourself with a team that you feel very aligned with, and you can see them work the strategy for you. Use someone or work with someone that's done what you want to do because they can actually show you how to get where you want to go.
Is there a difference between finding a buyer's agent for an investment property and for a principal place of residence?
For sure. Yeah. Owner-occ is definitely more of a personal feel. Owner-occ is very, very different from investment. It's one of those things, it's a bit more of like a personal, emotional sort of thing that you're going to have with them because obviously it's a significant purchase and you need to feel that alignment as well.
So I used a buyer's agent for my owner-occ, so I'm glad you said it's acceptable. I was wondering what you would say. But yeah, for us it was like, here's the criteria of everything that we want.
Yep.
And for us, it was someone who knew the local area really well, and that was super valuable. He was also an ex-builder, so that was super valuable in crossing some apartments off the list that he thought had building defects.
Yeah, for sure.
So, like in terms of like criteria for what makes a good buyer's agent, like what are some ticks you want? Like how much do you care about local knowledge? Maybe let's keep our investment hat on, and then like experience and stuff like that. As well.
And by the way, just to touch on your point around, you didn't know if I'd tick off on it or not. Like, man, the simple reality is like if they're doing it every single day and you've never bought a house or you've bought one house, they're going to be significantly better. They should have all the connections as well.
Yeah, well, that was the other thing. They knew all the real estate agents, a lot of off-market inspections.
Yeah, 100%. So like for us, man, we buy over 95% every single month is off-market, right? Like 95%. Like for only 5% of what we buy is on market, and it's with a connection that we've already got that tells us the contract's crashed, this is ready for a steal. That's it. Right. We don't buy anything else on market because we like to take the heat out of the transaction. That's what a BA should be able to do for you, whether it's owner-occ or investment. And I think this is the thing with runs on the board. So this is where you sort of want to really grill someone on runs on the board. How long you've been doing this? What have you done for yourself? They're the sort of checklists you really want to go through, because if someone's been there, they've done it, they've built a big portfolio. The big thing with this is like building a big portfolio before the business. So it's all well and good. And I've always been open with my first like 40 to 50 properties in my portfolio. I did that with I did the first 30 with no business income, and then I was like low docking my portfolio and a bit of the business, but I wasn't making that much money through to 50. But then from there to where I am now, obviously having a large income helped from that end. But the first like 20 especially, I was on below the average Australian income for building that. And I just think it's important because there's one thing to, be on an average Australian income and build a sizable portfolio versus, all of a sudden started making, 500 grand a year or something and then could just scale it easy as because my income, my servicing wasn't cap. So when it comes to strategy, it just needs to align with who you are from that perspective. And yeah, man, they're sort of the questions I'd really grill them with around that. If you're going investment and if you're wanting to actually scale a portfolio, because yeah, you need someone that's been there and done it before. Otherwise, how are they going to show you how to do it if they haven't done it themselves?
Yeah.
What are your tips and tricks around payment? Like, what should we be expecting as like average
Payment with a BA?
Yeah, like
So it very much ranges depending on the individual and the circumstances and also their experience. So BAs will range anywhere between 15 to 25,000. A lot of BAs will charge the whole thing up front. I literally from the very start have only ever charged. I actually used to charge $1,000 up front. Then I went to $2,000. Now I'm $3,000. We're still $3,000 up front. And look, we have an APS membership now. So we have two prices based on the APS membership, and that comes with School of Property and obviously all the strategizing piece that comes with it as well, like with our strategists.
And so overall, you said 15 to 25K.
Yeah.
Is it generally like, should people be looking for that fixed fee, or like will BAs charge a percentage of asset?
Yeah,
as
it
well?
depends on the purchase price. So when you start going above about $1 million, pretty much everyone kicks in percentage wise. We don't buy over $1 million except in commercial. So when you go over commercial, deals get a lot more complex. Like when it comes to resi, they're pretty similar. If anything, the cheaper the property, the more headaches, the more bullshit you have to kind of go through with that. With commercial, it gets a lot more complex, especially once you start going above like 3 to 5 million. It starts getting very complex. Leases are very detailed. You have to be all over the due diligence.
So holding on resi, because that's probably where most people are listening.
Sure.
Once it gets over $1 million, they shouldn't be surprised if BAs flick over to a percentage base.
Yeah.
What percentage would you say is?
Again, it really depends on the area and what's sort of normal in the area. We see anywhere between about 1.5% to 2%. Really, and the biggest thing to take into account is your good BAs aren't going to drop their fees. It's as simple as that. They're in enough demand. They know what they're worth from that perspective. They've got enough clients from that end. So like they're not going to drop their pants. What you'll find is the people who are at the lower end of the scale or people who are like a bit desperate, they will do it to get a fee done. Yeah, someone that's really, really good, they're just not going to do it from that end because they hold themselves to a different standard as well. So
love it. Well, Sam, thank you so much. If you would like to get in touch with Sam and the team from an investment point of view, head to australianpropertyscout.com.au. You can book in a call there. Equally, though, you've got your School of Property, Sam, which is open to everybody. And you can head to schoolofproperty.com.au to find out more information about that. As always, it's a pleasure.
Always, boys. Thanks for having me.
Thanks, Sam.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.